Welcome, everybody, to the New York Alternative Investment Roundtable's April virtual event, The Evolving Cannabis Landscape. I'm Ali Toko, president of the Roundtable, and we're glad you can join us this afternoon. First of all, I'd like to take a moment to thank our sponsors. I think you can see their logos on the screen. We're thankful for their continued support. And there's such a wonderful group of actively involved sponsors from the industry, so it's very powerful to have them on board. So thank you again. Now for a few quick logistical issues. For security reasons, today's event is being run as a webinar. And while this unfortunately means that you can't see the other attendees, it doesn't mean that we don't want you to actively participate. So I encourage all of you to ask questions of the speakers, and you can do that either through the Q&A function or the chat function. And our moderator will be monitoring those boxes to make sure your questions are answered. Now on to the event. Today we'll be delving into the ins and outs of investing in the emerging cannabis industry, and we're lucky enough to have a panel of industry experts who are extremely knowledgeable about the many issues impacting businesses in this space. Gretchen Galey is the founder of Panoptic Strategies and an advisor at Skip Intro Advisors. She has worked in the cannabis industry for the past 6 years in communications and government affairs roles to help advance the industry. She has also worked with lawmakers on tax policy and provided the U.S. Financial Committee with the data necessary to draft cannabis tax legislation. Prior to that, she served as a communications director from Congressman Bill Schuster, the chairman of the House Transportation and Infrastructure Committee. Welcome, Gretchen. Next up, Robert Hunt is the founder and managing member of Lanaya Holdings, where he specializes in assisting clients with legislation and policy issues, due diligence, and the structuring of both debt and equity transactions. He has founded and operated numerous successful cannabis businesses, including Tutara Capital, one of the world's largest cannabis-based private equity funds. He's also taught continuing legal education classes for the American Lawyer on cannabis law and policy, and is a frequent speaker at cannabis industry events. Prior to starting Lanaya Holdings, he was the owner and CEO of Rocky Mountain Hydroponics and Evergreen Garden Centers, which he sold to Grow Life, Inc., where he served as both the president of the retail division and a director of the company. Next, we have Jeff Schultz. Jeffrey is a partner at Fehrenstein Kurlik, where he advises alternative advisors on all regulatory, legal, compliance, operational, and risk issues. Prior to his current position, he was the general counsel, CCO, and partner at Navy Capital, one of the largest and longest tenured private funds dedicated to investing in the cannabis industry. He also focuses on advising cannabis industry operators on M&A, capital raising, banking laws, state law, cannabis compliance, corporate governance, intellectual property matters, and strategic partners, pretty much everything in the cannabis space. He advocates to the U.S. Senate on cannabis policy reforms and is a member of the New York State Bar Association Committee on Cannabis Law, the co-chair of the Financial Services Committee of the New York City Cannabis Industry Association. And finally today, we have our moderator, Mike Zetsky, which I knew I would mess up because we practiced it, and he goes by Mike Z, so I'll let him correct me. Mike is the founder and CEO of High New York, one of the world's largest cannabis meetup groups, and is the author of the Cannabis Business Book and host of the Cannabis Business Coach podcast. He has served as cannabis industry mentor for the National Science Foundation and for the Founder Institute. He began his career as a financial analyst at JP Morgan before moving to Silicon Valley to work for Google. And now I'd like to turn things over to Michael, and I apologize again.
No worries. Thank you so much, Ali. And it's, in case anyone's keeping score, it's Michael Zaitsev. And I'm delighted and honored to be here and to have the opportunity to chat with such a distinguished group of cannabis experts and leaders. And so I'm going to just dive right in and open this up to our panelists to begin. You know, we had some major news this week as the governor of Connecticut signed cannabis adult use legalization into law, and we're seeing a wave of legalization across the East Coast this whole year. So, what does this mean for the industry, and what does this mean for cannabis policy on the federal level? And anyone, feel free to jump in.
Sure. I mean, I'll start off. I mean, I'm not the policy expert the way Gretchen is, and Jeff obviously spends a lot of time on Capitol Hill. But from having watched the industry evolve over the last 15 years, I can definitely say that watching New England move completely towards adult use legalization across the board. I mean, we've had Maine and Massachusetts for quite a while. Vermont just recently did it. Connecticut now has gone, as of yesterday, the Rhode Island Senate has now put a bill forward that's going to go in front of the governor's signature as well. So really soon, we should be seeing all of the New England states with adult use. New York has already gone, New Jersey's already gone, which means we're going to have contiguous states that go from south of DC all the way to the state of Maine with adult use legalized cannabis. Which, when you think about in geographic terms and population terms, if you think California as a single market is 12% of the U.S. market, and what it is from a land use side, you've got basically the same thing with the five New England or six New England states plus New York. So that's 25% of the U.S. population just right there that now is adult use access. But more importantly, with New England, it means that you now have to deal with Commerce Clause issues. You have to start thinking about interstate commerce. You have to start thinking about what it means for people to cross state lines when they let's say live in Connecticut but they commute to New York and then have a ski house in Vermont and have their summer house out in Rhode Island. Do these people not have the ability to purchase cannabis, not ability to cross state lines, not the ability to do all sorts of other things that for a long time have been prohibited? So from the perspective of what does this mean optically, it means that massive changes happen, and it's something that the federal government needs to look at more closely, not because they want to, because they're being forced to at this point.
I would say, well, Congress does need to take a look at this. I don't think that they will get moving at all. I mean, it's nice to see that the Northeast is coming on board. And like generally in New England with legislative matters, when one state goes, pretty much they all follow suit because they're just such a tight-knit community up there. But I really don't think you're going to expect to see much change on the federal level until you have perhaps up to 35, 36 states that have adult use. Washington is notoriously slow to change. Change does not come from DC at all. Change has to go to Washington. And so I think you'll need to see many more states legalize on the adult use side before Congress is going to take any action. And even if they wanted to take action, this administration is not a friend of cannabis.
And to add to that a little bit, from a market perspective, what does this all mean? The East Coast falling and just really most recently 7 states legalizing adult use. We're up to 18 with Connecticut. In those 7 states, not including Connecticut, you have 50 million residents. That's a huge TAM or total addressable market. I think that market, just those 7 states alone, we're looking at, I'd say, $12 to $15 billion in total addressable market, and that's annual revenue number. To put that into perspective, and I think it's really important for anybody who's looking at cannabis from a global perspective and maybe thinking or don't know the nuances between Canadian companies and US companies, to put that into perspective, the entire aggregate revenue generated from adult use sales in the entire country of Canada in 2020 was just north of $2 billion. New York alone is projected to be a 3 to 5, perhaps a little higher, $1 billion annual revenue market alone. So those Canadian companies have no exposure to US assets, not now. I mean, they have in certain convoluted structures that perhaps trigger their economic and financial involvement in the US, but that's a long time away, right? So the market's huge. It's going to have a massive impact on the actual cannabis industry. And then from a policy perspective, I agree with Gretchen, it's going to be years, right? This is, there's no real, there isn't a sufficient appetite to deschedule cannabis yet in Washington. It's just not there. And you can read all these tweets. It's just, I don't think it's there. And I think at a minimum, as a threshold matter, we need 25 states that have legalized adult use. That's, you're going to need at least half of the senators in this country having to report back to their constituents on this. And it won't be black and white either. It's not, legalization isn't necessarily a boon for everybody. It's really going to depend on how legalization looks, if that's a real term, right? Descheduling, how's it going to look? But I think we'll get to that in a little bit.
Great. And to follow up and stick with the policy side of things for a moment, because of course that determines everything on the economic side of the industry and the opportunities for investors. You know, there's been a lot of, I won't call it noise, I'll say chatter this year about the Safe Banking Act, and then Senate Majority Leader Schumer making a lot of bold statements about the MORE Act and how he's going to propose something really bold and substantial. And yet, just the other day, I believe it was President Biden's Director of Veteran Affairs said that he's not open to more research on cannabis as a treatment or tool for PTSD for veterans. And then, you know, a few weeks ago, we had that story about Biden staffers getting fired for prior cannabis use. So I want to get your sense of, you know, how 420 friendly is this administration really? And then I guess as a separate question, when do you think we'll see the Safe Banking Act or the MORE Act or some kind of substantial federal progress, whether it's decrim or legalization? When might we see that? And I'll start with Gretchen and then go to Rob and Jeff, if that's okay.
Well, I would say this administration is not cannabis friendly at all. If you look at history, I mean, Joe Biden was pretty much the king of the war on drugs. And so I don't see this man changing his mind anytime soon. And if cannabis does make any headway through Congress, which I highly doubt it will, the first thing he'll do is, you know, convene a task force to study this for a few years. I don't think Joe Biden is going to be signing anything that comes to his desk anytime soon. As for Chuck Schumer and his wonderful tweets and everything, you know, his grandstanding, I mean, he's never met a media platform he doesn't love. But if you do the math, he doesn't have the votes. And I think that's why we have not seen this piece of legislation show its face. If it was there, if there was this appetite, it would have came out on 420 like they originally wanted to do. I see Chuck Schumer as a much greater hindrance to the industry than anyone else. For the man to say that he's not going to bring anything else to the floor except for his all or nothing bill, I think is going to be a hindrance to the space. And I think people need to tell Chuck Schumer that if they want to see real change in Washington, they need to start looking at other things. And I'm a big fan. Dave Joyce of Ohio recently introduced a bill which is very similar to the MORE Act. I kind of call it the MORE Act Light. I think it's a little more friendly to conservatives in the space. I think he takes a different look at how social equity should come into the industry by offering it more through the SBA and small businesses and getting the finance out there, the capital that these businesses need, and not necessarily setting aside special licenses for folks. I think that's more palatable. Main thing people need to remember in Washington is you need both sides of the aisle or this isn't happening. And I think a lot in this industry often forget that.
Yeah, I agree with everything that Gretchen just said. And I'll add to it that, you know, February 5th, there was a great deal of euphoria that swept the nation around potential cannabis reform when the Senate composition went back to the Dems with a very, very narrow majority with, you know, Kamala as a tie-breaking vote. There certainly aren't 60 votes in the Senate right now to pass any major piece of legislation. There may be some people on the Republican side of the aisle that would cross over more on the Libertarian side, whether it's, you know, a Ted Cruz or a Rand Paul that would say, you know, we'll vote in favor of cannabis legislative change. But the fact of the matter is probably all the major pieces of legislation being states, MORE and SAFE are pretty much DOA as they stand today. And Gretchen's absolutely right that, you know, incrementalism is probably the approach rather than, you know, an all or nothing. And, you know, we've already seen, you know, things that would be previously assigned to a Republican as a committee head now be assigned to a Democrat as a committee head, where they're not willing to budge and, you know, go through a process where it actually becomes more palatable to the Republicans to try to get this thing passed. So, you know, on that side of it, from a federal perspective, it's, you know, not nearly as friendly. You watched all the values of the publicly traded MSOs rise precipitously right after the February 5th vote. And anyone that was truly watching what was happening within DC was looking at going, this is crazy, because there is nothing that gives us any more comfort that we're going to see a massive piece of legislation change. But what I will say is, for the industry itself, from like a CAGR perspective, it doesn't really matter. In many ways, the MSOs love illegality. The second that, legality happens is the second that every private equity firm starts coming in, every big bank, every hedge fund that's probably listening to this discussion right now, you're already thinking about what your entry points are into this industry. And I can tell you that the larger MSOs are perfectly happy to keep you out. So, as long as they can continue to build their market cap, continue to build their business, we'll see the first company in cannabis have, $1 billion in top line revenue this year coming out of Curaleaf, and GTI will be north of 900 million. So those guys don't necessarily want the competition coming in. So they'll sit there and, tell you publicly that, oh, we really need to see change on the federal level. Ultimately, that's not the case. So long as, there's no bite behind the bark from the federal government, then, the cannabis industry is perfectly happy to allow this thing to continue, as long as we're seeing expansion in the markets at a state level or a municipal level. The federal level doesn't make much difference outside of the fact that we'd like to see things like 280E go away as a tax restriction. And we'd like to see access to leverage, maybe access to, to cheaper capital. But other than that, even the cost of capital is coming down for the larger, more solvent companies. So, federal legalization is nice, but it's not necessary.
Yeah, I'll just riff off of what Rob said. But the cost of capital is coming down organically. There just are more incremental participants in this industry from an investment perspective, and that's great. The way to get that cost of capital down to where it needs to is to pass the Safe Banking Act, right? And not everyone has connected those dots yet, particularly policymakers, lawmakers. Haven't done that, right? So if you want, the Safe Banking Act, in my mind, it should be broadly supported by both sides of the aisle. You're gonna have a lot more jobs, a lot more tax revenue, access to financial services. These companies can run much more efficiently by not having to use cash or having all of these problems with dealing with, very select few number, select banks that will work with them. But what it really is, safe banking is an equity bill, right? And Rob pointed this: the cost of capital for GTI and Curaleaf and TrueLeaf, when their debt is high single digits. I mean, it's still on an absolute basis a very big number. They're trading like junk bonds, right? Or worse. I mean, whatever the lowest grade debt you can find, it's trading above that, which is pretty silly. But the issue really is small business owners, particularly minorities and other underrepresented business owners. They have no access to capital, right? So you have people who have never met a family office before. They don't know billionaires. They don't know the people, these VC funds that are funding cannabis. They don't know the people that are on this call. They don't have any shot, right? So it's a complete illusion to think that you can hand a license out to someone who has a criminal record and they maybe never run a business before, may be great at it. They may be great at it, but they don't even have the opportunity to convince investors of that because they don't even know where they are. The only way to lower the cost of capital for the people that matter, right, from a global perspective in this industry, and the larger goal of creating a level playing field for everybody, particularly for minorities and people who've been disproportionately impacted by the war on drugs, is to reduce the cost of capital, open it up, and let these people get funded, and not from the government, right? And that's what the proposal here is in New York, right? The state of New York is going to fund most social equity applicants. It's a huge experiment and a very big bet, and it doesn't need to happen that way. But I do think SAFE happens. I do think SAFE is going to make it by year end, and I do think that's going to be the message that brings it home. This bill should get broad bipartisan support for all of those reasons. After we see this attempt at some sort of MORE Act 2.0, States Act is DOA. It's not even worth talking about ever again. We're just not ever going to get. And as much as I like the bill that was introduced in the House by the Republicans, that was more of a policy position statement, in my opinion. That was a way of the Republicans laying out, hey, these are all the issues that we don't have any issue with. We're going to be cool with these things, but they completely left out anything related to social justice or criminal justice reform. And knowing what I know and talking to the people that I speak to, no bill to deschedule cannabis is going to get through without that. It's just not. It's not going to happen.
Jeff, when you say you think when you say SAFE will go through, do you think SAFE will go through as a standalone bill, or do you think it's going to go through
No.
as a rider tacked on to something else? And if it is tacked on as a rider to, let's say, like a must-pass piece of legislation, like the omnibus spending package, will that move the needle for JPM and Chase and Wells to actually change their policies if it's has to be passed annually?
So yes, no. I think it does not, no, yes, no. It will not be, I don't see it being passed as a standalone bill. I just don't think the opportunity is going to present itself, but it should get attached to a must pass bill. But the adding it as a rider to the appropriations process is not, I assume you're asking that question with a pretty, a lot of conviction about the answer there. I'll just say I agree with you. It's not going to move the needle at all. There is no financial institution or the compliance department where I come from. They're not going to say yes on an appropriation. They're not going to greenlight cannabis banking or any service to plant touching businesses on the basis of an appropriations rider that could be pulled out from under them at any given moment. That said, it's going to get introduced that way. I don't think for the purpose of actually getting it through that way, but there would probably be a little dust up about that too. And I'm sure people are going to waste their breath talking about that.
It's exactly the reason I asked is, I think that for people that are listening on this call, it's a major distinction, because if SAFE goes through as a standalone bill, then you'll actually have the compliance departments of the major financial institutions making a determination that we can, turn the battleship around and go a different direction. But as it stands right now, no one's going to change massive policy within a large bank to do something that, as you said, a year later could change. Even though, the smart money is that it won't. It'll continue to pass as a rider, attach the spending bill the same way that, Rohrabacher Farr did for years. But at the same time, you can't change major policy decisions within a financial institution without the certainty long term.
The most critical issue in this discussion about whether it gets attached to an appropriation or as a rider to an appropriations bill is that it's a defunding concept, right? The Rohrabacher Farr Amendment, for example, says that the DOJ is not allowed to spend a single dollar even going after a state legal medical cannabis operator. Unfortunately, that has not yet been extended to adult use. That's something that we could definitely see this year. But that's a message from Congress with the power of the purse saying DOJ is not allowed to spend a dollar going after anybody who has a state medical license. The problem with jamming a SAFE banking into a appropriations rider is there is no federal agency that has control over this. Whose purse are they pulling? Nobody's. It's just not. That's not how it works. So and even if it did work that way, I just don't see that happening. I don't see any bank moving on this at all without very clear cut, or the exchanges for that matter. What should happen is it gets attached to a permanent bill, and FinCEN updates their guidance. And I think we have to. Advocates need to push for FinCEN and Treasury to extend that guidance to not just depository institutions, which are just banks, right? But also FINRA and FINRA members, and FINRA, obligate FINRA to update their AML regulations so that FINRA members, broker dealers, investment banks, exchanges will permit plant touching businesses and services to those plant touching businesses to occur. That is, as we know, that's I wrote about this 2.5 years ago. We need uplisting.
I think it's also important to note, though, to the folks out there listening, while safe banking would be a nice to have, it also does nothing for 280E, which is a major hindrance to the industry. And I think a lot of people miss that. They think that safe banking is going to fix every financial problem in the space. And it is quite limited in what it can do. If we want to see real change, we need to deschedule and not reschedule. Rescheduling just opens up a whole other world of problems. But like we've said, like everyone here agrees, Washington just really doesn't have the appetite for that right now.
Yeah, and just for some background for some of the audience that may not be familiar with Section 280, the tax code, it's really meant for drug dealers. It basically prevents, in this case, even state compliant, state licensed cannabis operators, like we're talking about, from deducting any expenses except for their cost of goods sold. And in addition to that, you have the IRS now auditing a lot of cannabis businesses about their application of 280E and what they're classifying as cost of goods sold. If you're a standalone dispensary, your only COGS is your inventory. That's it. It's a little bit more favorable, and that's why the vertically integrated model is working well right now, and it probably will continue to work well. But that's why it's such a better business than a standalone retail business today. But it's got to go away. The issue with that is that if you were to introduce the 280E or getting rid of 280E or disapplying 280E to cannabis, they'll never revoke or get rid of 280E because it still should apply to drug dealers. But if you were to disapply 280E to cannabis, it's going to have a net negative impact on the federal budget and fail a CBO score. And legislatively, that's not going to. I just don't know how that happens without replacing it with an excise tax that requires federal legalization.
There's zero motivation in the federal government to repeal 280E, and anyone that thinks they can just make it go away is sadly mistaken, because right now it's basically free money that the IRS is pulling in, that they can sit back and say, yeah, we're supportive of the cannabis industry, and so long as that means they're just pulling every dollar out of the cannabis industry in the process. And that's one thing, as we get into the more of the business side of this discussion, that everyone out there from an investment perspective should be very aware that not all revenue within the cannabis industry is created equally. And when people look at companies and say, oh, well, this company, we should be trading it at X times EBITDA or X times, rev, we'll look at those two things and think about, what happens post EBITDA when you actually take tax out, because it's a completely different calculus. That a company that looks very solvent on its face, if it's a retailer, very likely is operating at a net loss, even if its EBITDA production is fantastic.
And has a tax bill. Imagine paying taxes and you lost millions of dollars. And you have a $2 million loss and you owe $5 million in taxes. That's fun.
Awesome. So we're naturally shifting into more of the economic side of the discussion, which this is one of the best panels I've ever been on. You guys are making it so easy for me. So I want to ask you to go a little deeper into the cannabis investment landscape today, and maybe even offer just a quick history lesson of what you've seen over the last few years and how the markets have evolved and how we got to today as far as capital markets. And yeah, why don't we start there? And Rob, would you like to kick us off here?
Sure. I mean, I think I probably have the most experience of kind of going through this process over the last 15 years. And what I can say is that, when I started Tuatara back in 2014, going out there and raising a large pool of capital, I think we were the first, $100 million fund to really hit the market. And I can tell you that for, every person that said yes to us initially, 4 out of 5 of them would come back after, running up the flagpole at their financial institution, only to find out the answer ultimately was no. So, our fund should have been significantly larger. There's definitely the appetite for investment in cannabis. But, if you worked at most places, you couldn't get it past the compliance department within your organization. So, with that in mind, 2014, 2015, those are the years of the first private equity groups. Gretchen's company is, a PE funded company as well, coming out of the cannabis space through Merida Capital. All of us kind of went out right around the same time and raised decent pools. Everything was going along relatively well from the PE side. And then 2 major things happened. The first one was Justin Trudeau legalized cannabis up in Canada, which meant that, all institutional capital started flowing into the Canadian market at stratospheric valuations that could never be justified. And anyone on the US side of the line was looking at these companies like Canopy and Aurora and Tilray and Kronos and going, this is absolutely nuts that these guys have a tiny TAM, as Jeff, alluded to earlier, like a TAM that's smaller than California's. Yet you were getting companies with, north of $10 billion market caps for being licensed producers of cannabis. They didn't have a dynamic business model. They're just growers. And so all of us, sort of knew that there'd be a reckoning at that point. But what we didn't foresee at the time, this is in 2016 or 17, is that those guys would suck the wind out of the sails of all sort of the PE guys on this side of the border. So, capital is flowing very, very quickly into these Canadian companies, and, all the sort of quasi-institutional groups were saying, well, we're safer going into, these more liquid assets that don't have a 10-year horizon attached to them. So, they flowed that direction. And then we found that, the US companies on the PE side, we were competing for assets against these guys, these massive pools of capital, and being able to use their stock as currency to come in and try to compete against assets in the US. So if you're a PE company, you had to make a much higher bid and asset prices went way, way up during that period. Well, that changed in 2018 when the shine came off of the Canadian market and really hit kind of a brick wall. So what you saw was everyone being underwater in their Canadian portfolios, and as a result, it took down the U.S. companies, all the MSOs that now are really taking off again. All of them just took a beating as well, which it didn't make any sense for that either, because these companies, their growth rate was fantastic, but they're the proverbial baby with the bathwater. As Canada kind of blew up, they took the U.S. down with them. So you actually saw asset prices come down very, very steeply in the U.S. in 2018. The problem with that is that nobody was putting money into private equity anymore. Nobody was actually investing in funds. So it wasn't until like midway through 2019 to early 2020 that you really saw a turnaround there. And surprisingly, it happened during COVID when cannabis was designated as essential, and you started seeing the cannabis companies sort of slow down on their growth as far as building new assets, because it was really tough to do during COVID. But their same store sales skyrocketed. So you saw just fantastic growth within the industry on a market by market basis. So you saw money start to flow back in, but as you did, people were still looking for something that was more liquid, and that was the rise of the SPAC. And you saw more and more SPAC transactions come out, whether it was Air Strategies or what the guys at MJ Freeway did, I think is the first kind of SPAC to hit the market. And now you've seen Mercer Park hit, and you've seen the parent company hit. There's a handful of other SPACs that are coming out. And again, there it's kind of an easy look, because if you don't like the transaction as a qualifying transaction, you just redeem. So it's much more riskless in that process, and you can usually end up holding the warrant coverage anyway. So where the cannabis capital has flowed in the last 10 years has changed significantly. I think ultimately it's going to go back where private equity or private capital is going to be more in favor. But right now, a lot of capital went into the publics. Those guys, a lot of them did 10x last year as far as market cap growth. We're not going to see that this year. We'll probably see all these companies kind of stay steady for the year. And as investors realize they're not going to get a great pop out of the public markets, they'll be looking for better return profiles coming from the private market again. And that's where I think we're going to see just really great opportunities in 2021, 2022, is pricing assets at 6 times EBITDA or 1.5 times rev, scooping them up, packaging them together, and then taking those companies out yourself. And that's should be what a lot of people are looking at, is what the new paradigm is.
There's a lot of that activity going on now, as you know, right? Rob knows quite well, seeing a lot of roll-ups of these, at the lower end of the market, just playing a valuation arb there at a minimum, even while staying private, you can get that lift. And I agree with everything Rob said. Is a very good summary of like the timeline here. I got into the industry in 2018, right before Canada officially legalized, and just for everybody's history books here, make a note, the top of the market in Canada was when they legalized. Like, I think it was that month. And what happened, I just wanted to add one thing to what Rob said, and it goes to liquidity, and anybody who's looking at investing in the space needs to understand liquidity dynamics. It's absolutely critical to this conversation. A lot of the US companies were raising money and looking to go public through RTOs, reverse takeovers in Canada. So US plant touching businesses have to list in Canada, but the Canadian companies can list on US exchanges, on NASDAQ and NYSE. So these US companies were all gathering assets and gathering cash and going through these public, RTO, right? So they go public through an RTO, find a dead mining company, and go public through that shell. And there was a ton of capital that went in there, and they got listed on the Canadian Securities Exchange. And not only did you see Canada falling apart, but you also had contemporaneously around the end of 2018 and the first half of 2019, most of 2019, these US companies going public on a quasi-exchange, a quasi-public exchange. The Canadian Securities Exchange is really the only place for MSOs to list. And those exchanges have no volume on them, right? Most people can't trade that. Retail traders have trouble accessing or having a brokerage account that will allow you to trade on the CSE. You might get to trade OTC. A lot of these companies are dual listed on the OTC as well. And then you just had this funnel of capital of a lot of people, early investors, family offices, high net worth, ultra high net worth individuals who had spent several years in a private company. They had their liquidity event. Only that liquidity event was a mirage, because that liquidity event was listing on the CSE, where everyone and their mother ran for the exit at the same time. And these stocks got absolutely obliterated. which bottomed amazingly in March of 2020 when there were riots in Denver.
If you could even get out of them, Jeff, the problem was you had to open a Haywood account or open another account north of the border, paying massive brokerage fees to even get out of these things. And, people thought they could just take those shares, treasury shares, and stick them inside their Fidelity account or stick them inside their Merrill account. And that didn't exist. So I had more clients.
And no one knew how to do it.
Yeah, people coming to me every week going, well, how do I it's great. This company did this RTO. I'm sitting on a pile of stock, or my company just got acquired by these guys. I thought I was about to be liquid, and I've got no way to actually sell my position. And if I do sell my position, to your point, it wasn't like you could go through a large block trading desk in an easy way or put it through a dark pool. Essentially, to put it out there in the open market, you were going to crater the share price in the process. So as you said, it was, a race out the door, which just, killed the value of these companies in the process. If you were even savvy enough to figure out which broker to use in Canada to get it done.
And that's a function, it's the indirect result of this industry not really being open at that time to institutional capital, true VC money, was that money, the early investors who wanted that liquidity event were almost entirely just high net worth, ultra high net worth family offices, multifamily offices. You have very few VC funds who have a longer time horizon, who think about this perhaps more strategically in many cases, and say, I know the company went public, but I'm holding this thing for another 2 or 3 years, or maybe I'm on the board. Whereas in cannabis, you had just individuals saying, oh, I made $1 million. I got to dump this thing tomorrow. And only to find out that it was not that easy. Probably should have just held it, most of those people.
Gretchen, do you want to add anything, or should I keep going?
Sorry, still on mute. No, honestly, finance is not my expertise, but I think it's interesting to see, this year alone, we've seen about $6 billion come into the industry in investment. That's 3 times what it was last year. I always get questions from folks asking, is it too late? Have I missed the boat on cannabis? And I would say absolutely not. There's still plenty of room for folks to get in. I do think we will continue to see a lot of investment. The M&A deals this past year have been quite prevalent. I think 3 or 4 times what they were in the past. So I think this is definitely an opportunity. And to a point that Rob made earlier on another question, was with everything still being illegal with the federal illegality. This is a great time for folks to get in and kind of build their investment and get the where they want to be before the big boys come in and kind of crush everyone. So I think there's still a lot of opportunity out there for folks.
Excellent, thank you. And so, Rob, I see you want to jump in. I'll give you a chance in a moment. I just want to ask you all, since I heard you talk about entry points, both for investors and for entrepreneurs throughout the course of this conversation. So I'm curious, what are the entry points right now? Where are the best opportunities to invest in the cannabis industry?
Let me ask you a question and ask, are you talking on the private side or on the public side? Because it's a completely different answer.
Aha. I'm glad you asked me that. We could take it either way. I'm guessing for the audience here today, the private side is more relevant, but I could be wrong about that. So why don't we start with private, because it sounded like that's where you see more opportunity, but feel free to correct me if I'm wrong.
Yeah, look, it depends. For a lot of the people that are on this call that are, representing hedge funds, then on the public side, there's a tremendous amount of opportunities. It goes right to what Gretchen was saying, where I wanted to jump in a minute ago, which is when you see the $6 billion that's flowed into the cannabis industry this year, the vast majority of that has happened through bought deals on the Canadian market. It's a company will say, hey, I'm going to go out there and do a bought deal with, my broker at Canaccord or my broker at Beacon or Gundy. And in 24 hours, they'll raise, north of $100 million. So you look at a company like, TerraSend that, a year and a half ago didn't have a huge reputation and suddenly raised $224 million in 24 hours in February or in January. And they're able to do that because they could go out there at an 8 or 10% discount to market, make an announcement. The hedge funds would go out there, take allocations, gobble it up. They'd be oversubscribed. Oftentimes these deals would come with, half a warrant that's, priced out of the money, but 3-year time on the warrant coverage. So, super easy investment to make on the hedge fund side, because all you're betting is that, in the 8 days between the time you're buying and the time it settles, that it's not going to drop that 8% between, the settlement price that, you bought at and the settlement price. So as long as there's any meat left on the bone there, you came out unscathed, and then you sit there holding long-term warrant coverage, and it gives the company a tremendous amount of liquidity. Now, it comes at the risk of dilution to the existing shareholders, and most people aren't doing these deals unless there's a, kind of an uptick in the market. So right now, those deals have cooled off significantly because the market has cooled off, and right now volume is 1/4 of what it was in January and February. But every time you see a kind of a rise in the cannabis stocks, whether it's based on 420 coming up, or based on new legalization, or some other like major announcement, when that happens, every one of these public companies is sort of just waiting and saying, okay, now's the moment, go hit the bid, let's go out there and raise $200 or $300 million. And once we have, that's when the real fun starts, because then those guys go out and work the arb that Jeff was talking about, where these companies are trading at between 30 and 50 times EBITDA, and then they're going out there and buying assets at 6 to 8 times EBITDA. So there's a massive arbitrage, and they're not even using cash to do it. They're using 80-20 deals, where they're putting in 20% cash, 80% stock. So if you raise $200 million, you can make that $200 million act as $1 billion in purchasing power, because you're going out there and sucking these other companies in. You're sucking them in at this massive discount to where you're trading. So it makes sense to do these deals all day long. And you've watched that happen with every one of the major MSOs, and quite honestly, with all the sort of the mid tiers as well, which are, the Jushis, the TerraSens, the Airs, Forefront, Harvest, all those companies that are trading between, call it $750 million caps and like $1.5 billion caps. Those guys, like once you hit a certain point on the public side, access to capital now is simple. There is no barrier to entry to be able to raise $100 million overnight, which wasn't available a year ago. This is the first time we've ever seen that, where it's that easy. Now, having said that, on the private side, Jeff alluded to this earlier as well, which is that on the private side, if you cobble together 4 or 5 assets and you do it in a thoughtful way, and suddenly now between those 4 or 5 assets, you're producing 80 to $100 million in top line revenue, and you're actually doing it profitably. Then you can go out there and start picking off other privates where you're still working the same arb. It's just not nearly as pronounced as it is from public to private, but you can actually still pull in companies. You say, hey, look, we think we're worth 4 times rev because we've got this scale, and we're about to take ourselves public. So if you come in now, you're going to get that pop when we actually do our RTO. So, stay with us now. Instead of being acquired by a big boy where you're not going to see the accretion in value, come with us and actually, share in the uptick in value that we're going to create as we take this company public. And I can tell you that, that still exists, and you're going to see a wave of new entrants onto the CSE in the next year or two. But the bankers are becoming very, very careful about who they're taking out. They're not going to take out, anyone that's, doing 30 or 40 million in top line now. They really want to see something that's going to be appealing to the market, that they can shop across Bay Street in Toronto. And if they see the right, deal, then they'll come out and say, hey, we'll do a pre-RTO round. We'll raise you $30 to $50 million in either debt financing or, like low cost debt for cannabis, like sub 10%, or we'll raise you, an equity round. And if they do, then theoretically, you should see, that a company that's trading at, I'll call it, 10 times EBITDA pop as soon as it becomes public to north of 20 times EBITDA. And those smaller companies that did get sucked in will see that appreciation. So there's a lot of sort of horse trading from the small privates when they're being approached. Like, do we want to go with an MSO that has liquidity right now? Or do we want to take a chance with a group that we think has the ability to go public? And when it does, then we're going to, share in sort of the same spoils that they're getting. So from a private investment standpoint, I'd be looking at the groups that are doing thoughtful roll-ups and thinking about how they're spending their capital. And if you find the right, manager, certainly think about backing those guys, because if they've got a path to liquidity of putting themselves on the CSE, now is a great time to get involved. And I'd certainly look to the free market states that aren't oligopoly style limited license states. So, think about roll-ups that are happening in Michigan, in California, in Oklahoma, in Maryland to some extent, Washington, Oregon. Those are the markets that allow for lots of little guys to get banded together to create something really large.
Yep. Just adding on that was going to be my question to you in response was, which market are we talking about? Right, there are all kinds of iterations here. The public and private is obviously the first distinction we want to make. In the public market side, I mean, the information arbitrage trade is alive and well. These companies are underloved, undercovered by sell-side analysts. The amount of quality sell side research is limited. Not because the analysts don't know what they're talking about. The ones that are covering it do know what they're talking about, but there are very few of them. So you're just not getting that same level of coverage, and that's a trade whether you're in cannabis or not. Whether you can get into positions in inefficient markets. Cannabis is maybe the best example right now, where it's just under the radar. It's difficult to understand. It's nuanced and complex and fragmented. But for investors who want to do the time and do their homework and the diligence and understand this industry, you look at some of the top multi-state operators that are publicly traded. They're trading as value stocks right now. It's frustrating as a shareholder of many of those companies, but it's also very gratifying to see that I just have a longer opportunity to keep building positions in some of these companies. I think that sentiment is shared by a lot of early cannabis investors. So on the public side, I think there's a ton of opportunity, but a lot of execution left. So it's not risk free. From a hedge fund perspective, I think the caveat on the public side is, I mentioned to it earlier, it's this is not the kind of liquidity profile you're going to find in Google or Amazon. You can't blow out of $1 billion, whatever huge position without impacting the market price. So there is a natural ceiling on positions that can be aggregated by institutional investors today without bumping up against certain risk parameters, probably in their profile and in their portfolio from a liquidity perspective. On the private side, I just think there's going to be a massive amount of deal flow on the East Coast. New York is big. It's the first time we're all going to, we as in people who are here in New York, are going to be able to feel and touch and taste and smoke cannabis legally. But it goes to the cultural normalization of cannabis and seeing it down the street from your office, and seeing it all over New York City. I mean, we see it all over New York City, but now we're going to see a legal and eventually a mature CPG market like California. And I think if you plop some of those dispensaries and some of those facilities into New York, people would be, blow their minds at how advanced it is over there. That's coming. And there are a lot of people that know that it's coming, and they're starting to put money to work even now in New York ahead of applications even being released. So I think you're going to see a massive amount of money being raised and deployed into the tri-state area and the East Coast generally.
Well, and another market that we haven't even really touched on that I think investors should really be taking a look at is hemp, industrial hemp. We're going to see some massive growth with that. They're expecting it to get up to 36 billion in the next few years. I think people forget about all the different applications that there are to hemp. We've seen patents taken out on it, looking at batteries, looking at makeup. There's all sorts of places for this product to go. And plus, because of the 2018 Farm Bill, it's kind of murky. I mean, we've been seeing some difficulty there, but at least on the federal side, we've been seeing more interest in moving forward with CBD, looking at different ways that hemp can be a part of our culture. I mean, you got folks like Mitch McConnell backing hemp. So if you're looking for a greater path, and folks who are looking for more federal regulations, that's what we're looking at currently. Is much more, and they're looking at CBD being looked at as a supplement and treated completely differently. So I think if you're looking for more progress on the federal side, and that might help impact your investment, I think CBD and hemp is definitely something you should be looking at more. I know it's not sexy. Nobody wants to talk about hempcrete or, hemp oil being used for ethanol or something, but it's definitely where some money is. And frankly, if I had any money, but I don't because I'm in politics, my money would go to hemp.
I agree with that. I think it's totally underlooked. I forgot about the big crutch. It's dead on. I'm not terribly excited about hemp cultivation for cannabinoid extraction, i.e. CBD. Not that interested. It's like echinacea. It's like comes and goes. It's like whatever. It shouldn't be. It might have tremendous use case, but I think use cases largely for CBD will probably be on the medical side in extremely high dosages. Doses like well north of 100 milligrams per dose. But these 5 milligram CBD gummies, like it's snake oil in my opinion.
Worthless.
That said, it's worthless, and people still buy it, and it's getting regulated, and that's not going to end anytime soon. It's still, legality is still kind of gray actually, which is wild. But the opportunities in industrial hemp, for all of the reasons that Gretchen pointed out. She's dead on with that. I think it's a massive opportunity, not for cannabinoid extraction, but for building buildings and car engines. It has tremendous use case. And I will say this, dovetailing to another sort of popular investing theme, but your sort of carbon footprint with respect to hemp cultivation and manufacturing of hempcrete is a double whammy win. No one's really looking at that yet. Not in well, some people are.
But I do think we should make the bright line distinction that the hemp industry and the cannabis industry are two completely different industries. The only thing they share really is the genus and species. One is regulated by the USDA and the Departments of Agriculture within the existing states, and ultimately the FDA will be doing it through the Cosmetic Act as it crosses interstate commerce. That's completely different from what we're dealing with on the state licensed cannabis sides. So while they're both sort of quote the cannabis industry, they are very, very different sides that really share no nexus with one another.
Awesome. And thank you for bringing that up, Gretchen. I, for years, have been scratching my head wondering why ESG and impact investors are ignoring industrial hemp. And, especially considering how many of the UN Sustainable Development Goals hemp can address in such a meaningful way. But that's a whole other conversation. So I see we're coming up on time soon. So I want to get to some of the audience Q&A. And I'm seeing a question from Anonymous about, have we worked through this cycle and are we moving back to a more rational opportunity in the private markets, or is it still unstable? I see, Jeff, you wanted to take a stab at that, so I'll give you the chance.
Yeah, I actually meant to hit the type. I was going to type an answer, but I think I hit the wrong button. So I'll just give you my 2 cents on this one. Yes and no. Back in 2018, 2019, and even still a little bit today, you have a lot of founders and management teams that unfortunately are made up of pure promoters and not real operators, just selling you a bag of goods. And I think that a lot of the pure promoters in this space have been washed out or in the process of being washed out. So we're getting real legit operators running and real leadership in this industry at the top level, at least the ones that are well exposed at the top level, like Boris Jordan and Ben Kovler and Kim Rivers and Charlie Bechtel. You're talking about serious CEOs. And if you look back at sort of the first generation multi-state operator model, that wasn't really the case. You didn't have that. So I think that, and even on these small—
Any names, Jeff? Any names?
The names are obvious to anyone who's been around for a couple of years who they are, but I think we're washing through that, and we'll still see. The thing is, it's not that black and white, because we're still going to see another iteration of these promoter types on the East Coast now saying, I've got the best XYZ and or the strongest this and the most efficient that. Like, no, you don't, or very, very likely you don't. And we'll still see, pardon my French, a lot of bullshit in the capital raising on the private side, and people trying to take advantage of retail private investors, wealthy retail investors. That's going to end. It's ending because, one, that's been proven to not really work well in cannabis, and two, I think you're getting much more sophisticated investors in the space that can see right through that, and a lot of us who have already been through that and know better. Whereas cannabis is this it's enigma wrapped in I forgot what the phrase was, but yeah, it's hard to understand for a lot of people. So a lot of investors have gone up the learning curve and will not be fooled by that anymore. So I hope that answers the question. The answer is yes and no. Depends on where you look.
Great. So now to close out, I want to ask you all either, what is the most exciting thing happening in cannabis right now from your perspective? Or if you don't like that question, feel free to just share any closing thoughts that you want to get out there. And I'll start with you, Gretchen, and then we'll go to Rob and Jeff.
I wish you hadn't started with me, but
we can go. We could. You can pass. You can pass the question to someone else. It's fine.
For me, honestly, because I'm a policy kind of gal, this past year has been interesting for me. I've been waiting 7 years for someone to actually seriously start talking about cannabis on the federal level. While I don't see much happening here, it's great to see that every week there seems to be a new piece of legislation that's being introduced, that folks are really trying to figure this out and kind of piece it together. Sadly, I don't think, some of them are the sharpest tools in the shed that are trying to do this policy on the Hill. But it is nice to see that they are finally seeing that this is a viable industry and maybe they need to start paying attention. Hopefully it'll get some more traction in the year to come.
Jeff?
Yeah, I'll go ahead. I think that there are a lot of exciting things. It's really hard to pick one. Anyone who works in this business is pretty passionate about it. I would say the most exciting thing going on right now is really the normalization of cannabis usage at every level, from the soccer mom to the suit, whoever it may be. I think that legalization of adult use in New York and watching this program roll out now is having a huge impact on the normalization of cannabis use, not only just here in New York, but nationwide and globally. We have New York City has 60 million tourists a year. They're going to be able to walk into coffee shops like they can in Amsterdam, and it's going to be around. And using cannabis is different, but in many ways no different than drinking alcohol. And in fact, I think it's quite much safer. And seeing that normalization occur at every age level and every demographic, and what I've realized working in this industry is you peel back a layer, almost everybody likes it, and some people are shy about talking about it, but that stigma is going away. And I think, again, New York's going to have a huge impact on the tri-state area legalization. Will have a huge impact on that, and I'm excited for that stigma to go away entirely. It bodes very well for the investment community and for all of the people who have been impacted by the war on drugs.
So I'll jump in and say, first of all, it's great sharing this panel with Jeff and Gretchen. Gretchen has access to immense amounts of data in this industry with the company that she works with. And Jeff has just massive amounts of data that comes to him through just the sheer number of clients that Feuerstein Kulik represent in the cannabis space. So, they get to see as a cross section pretty much everything that's happening in this industry across, almost all states. I'm much more siloed in what I do these days in California. I spend a fair amount of time looking at the public markets as well. But for me, the excitement, kind of dovetailing on what we just heard, is that it's not just the normalization in general, but it's also, for me, the most exciting thing happening right now is what's happening on the municipal level. This isn't just about states, this isn't just about federal. It's when you start seeing town after town after town that had the ability to opt out previously that are now deciding that they're going to say yes to cannabis. Most states give some sort of deference or home rule to the counties or the municipalities. And when they have for a long time, those towns, decide to say no to cannabis, as their neighboring towns are saying yes, and they're realizing that tax revenue is being produced in their neighbors, they're now stepping in saying, we want to share in that as well. And as they do, we're watching kind of a wave of dominoes fall across the country at a much more localized level. So it's not just the normalization kind of the overall category, it's the normalization of, there aren't rules around, kids being too close to a liquor store, but there are rules about kids being too close to a cannabis shop. And that's going to start changing as well, because it no longer makes sense. So it's different form factors that are coming out. It's the ability for larger companies to create bigger footprints. It's the ability in the free market capitalism states like the Colorados and Californias to allow for, some mom and pops to open up what are, akin to a craft brewery, while at the same time, growing some behemoths at the same time. It's the overall, part of this industry that is migrating. It's always been here. It's always been an illicit industry that's been going on for as long as any of us, they're on this call have been around, where you think that, we're not watching this new category pop up. All we're doing is migrating people away from an illicit market to a safer, more productive, better structured, more thoughtful market that's now being run by professionals and not drug dealers. And it's being done in a way where, local government, state government, and federal government officials are getting involved in the process to try to create something that, as a legacy when we give it to our children, is going to be something that our kids will never have to grow up with a stigma attached to cannabis again, based on what's happened over the last 3 to 5 years.
Awesome. Thank you so much. And I would share what I'm most excited about, but I see that we're coming up on time. So instead, I'm going to thank our panelists and hand it back over to Ali to close us out.
Thanks, Mike. And I'll do the same. Thank you, Gretchen, Rob, Jeff, Mike, for sharing your thoughts and insights on really a very complex and exciting industry. I think I can safely speak for everyone in the audience that it was extremely intriguing investment space, and it's nice to get a bit more clarity on the logistical and legal issues surrounding it. So thank you very much.